Good afternoon and welcome to Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, is our guest today. Vishnu, great to have you on the show as always on Monday.
Good afternoon, Brian. Always good to be here. Thank you for having me on Monday. Great way to start the day. So it's
Now,
midday, of course.
yes, it's already midday, yes. But, lots of things have already happened. We're going to start first with crypto markets. And if we look at crypto markets right now, Bitcoin is at 21,238.4. It's down 0.88%. Ethereum is at 1,223.98. It's down 1.14%. Now, looking at regional equity markets, we start with the STI in Singapore. It's up 0.6%. Looking across, we have the KLSC, which is up 0.1%. Shanghai is up 0.97%. The ASX All Ordinaries is just under 2% at 1.99%. The Nikkei is up 1.56%. The Hang Seng is up a whopping 2.88%. And rounding up the numbers, we've got the Kospi, which is up 2.04%. Now, Vishnu, what's your view on market performance this morning?
Market performance this morning is similar to having having a panda in the zoo. What happens is the elephants get overlooked and the bears get overruled. The regular bears get overruled, and markets are looking past, Fed tightening risks and all that discussion about recession. I mean, of course, in the nuance of it, there are many other things they're looking at, like Fed commands, G7 commands, and I think at the margin, markets are getting a little bit more hopeful of treading that narrow path and arriving at a soft landing, or at least that's what the price action tells us for now. But the important thing to remember is not to get carried away, because we're coming into the quarter end, so there would be a lot of rebalancing that distorts the underlying picture on risk.
Now, we can't get past today without talking about Russia's debt default. Tell us about it and its impact on debt markets across the world.
Well, I think that's initially markets were thinking this would happen a lot sooner, but of course, Russia surprised markets by meeting obligations, so on and so forth. They managed to spoon together some money to pay off. Now, I think markets will have to relook at where the ruble is headed, where credit metrics would look like for a lot of the larger Russian firms that may initially have been able to tap some parts, not the entire global capital market, but some parts of the capital markets. And it also brings into view the fact that, and this is the elephant in the room, which is that Russia's energy sales continue to be the main source of liquidity, cash flows, and funding for them. And so what it does as we go down the road is it increases scrutiny on how quickly the West is able to divert or rather to turn away from Russia as a source of energy and funding in an indirect sense.
And this is the messaging out of G7, isn't it? It's the closing of ranks and tightening the screws on Russia.
Yeah, I mean, and this is a tricky part. During a summit like that, it's quite it's always looks good to close ranks. But I think when the reality of disruptions to energy, high energy prices, and particularly the political social aspects of very rapidly rising inflation starts hitting home, then it becomes trickier to hold on to these ideological positions. And we've seen that happening in Europe for a while now. And that I think that's where the question lies: how much will it be resolved? Whether they can all end up on the same page on what actions need to be taken or not.
Now, Vishnu, what are some key other elements you've highlighted in your market commentary today that we should be aware of?
Well, I think the one of the main things for us is that in a sense this is a fairly quiet week with policymakers not out there drumming major messages out, or at least when I say policymakers, forgive me, I actually meant the Fed policymakers having said their piece. The ECB will be out there at their forum at Sintra. That would be worth watching, because markets are still waiting for the real details on their anti-fragmentation tool, as well as how far they want to go with rate hikes. Because here's the thing, whilst ECB has flagged a 25 basis point hike in July, the bets are really getting very sexy at the September end, because ECB would like to suggest something closer to 25 unless data warrant a bigger move. Markets are pricing in upwards of 75 basis points if they have a chance, and there's a real divergence there. That will also give us or inform us on how well the euro may hold up, because the anti-fragmentation tool and rate hikes both ought to hold up the euro. If there's disappointment on either front, that could unravel, which means the dollar that has been somewhat subdued can make a very quick comeback, and that can have a wider impact across the currency markets in the region, which means some of the stability seen in the region, the ASEAN currencies, that could also start to become wobbly if some of these things come to pass. Bigger picture as we go down a few weeks is very likely inflation signals are going to be on the hotter side, with more policy tightening than fewer. And that means that markets may not quite be done with some of the sell-off. And so, to overuse the term, whether the bouncing cat has a pulse or not becomes an important question.
Then, okay, speaking of the bouncing cat, whether a cat that has a pulse or not, on a very different note, where do you see the risks then for Asian markets right now?
I think the risks come from two particular avenues, and these are not the only ones. So on one hand, we want to isolate ourselves, insulate ourselves, and for a moment pretend that we can just look at our own situation. And I think the risk to inflation, particularly from the combination or the confluence of food and energy shocks, becomes very important. Asia, to some extent, doesn't have the same worry of a spillover service sector inflation to the same extent that the US has. Whereas the price shocks through energy, transport, food, these things are reverberating. So that will become an important assessment, because it will have a huge implication on what central banks have to do and how far fiscal policy can be stretched, given already the position is already strained after COVID, after years of COVID spending. The bigger aspect of it is, of course, if the Fed needs to continue tightening, then we're quite aware of sell-off in the market due to bond yields rising sharply, equities selling off, and that Russia. Let's bring it a full circle back to Russia. Russia brings about that whole question of credit risks, and this is where Asia needs to be quite wary, because even though we are quite insulated from Russia as a trigger for credit risk, in a bigger setting of the Fed tightening, you could have wider credit risks or credit risk spreads widening in Asia. That's to say, you can get prices falling a lot harder, and the real rub there is if it causes an adverse feedback loop. Currencies fall, capital flows up, currency falls further, and then it reinforces itself.
Yeah.
And without invoking tragic details, that would be the same dynamics that happened in 1998, and we don't want to overplay that risk, but the rhymes along those lines, I think, may be something worth watching for under the current circumstances.
Now, on that note, Vishnu, thank you very much for taking your time to be on the show, and thanks for your insights.
My pleasure, and sorry about the grim note.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on Biztech's Asian Midday Market Watch, powered by Al Rajhi Bank, Malaysia. I'm Brian Fernandez. This video will be on our various social media platforms as well as our website, www.biztech.asia. It will also be on Al Rajhi Bank's social media platforms. Please subscribe and like our various platforms. Thanks again for tuning in.